Every How to Invest in Canada video I've ever watched makes the exact same mistake. They explain the theory, but not the steps. By the end of this video, you'll know the exact 4 steps to go from zero, no account, no investments, no idea, to a properly set up Canadian investing portfolio. And I'm going to do it without a single piece of jargon. Let's get into it. Quick note. Nothing here is financial advice. This is education designed to help you make smarter decisions with your money. Here's why a Canada-specific guide matters. Most investing content on YouTube is built for Americans. They talk about Roth IRAs, 401ks, Fidelity. None of that applies here. In Canada, we have our own accounts, our own tax rules, and our own best-in-class investment options. And the good news, Canada's system is actually better for regular investors in a lot of ways. We have the TFSA, which lets your money grow completely tax-free. We have the RRSP, which cuts your tax bill today. And we now have the FHSA, a brand new account for first-time homebuyers that combines the best features of both. If you use the wrong accounts or skip them entirely and just invest through a regular taxable account, you could be leaving thousands of dollars on the table over time. So in this video, we're going to set things up properly from the start. And if you want a full breakdown of which account is best for you and how to choose the right one, I'd made a separate detailed video on that. You can find the link in the description. Step 1. Open a brokerage account. My personal recommendation for beginners is Wealthsimple because it's very beginner-friendly and easy to use. There are other great options in Canada too, like Interactive Brokers, IBKR, and Questrade. But if this is your first time using a brokerage, Wealthsimple is probably the simplest place to start. It only takes about 10 minutes to set up an account, and if you use the link in the description, you can get a $25 bonus when you fund your account with at least $100. It's basically free money to help kickstart your journey. Now, why Wealthsimple and not one of the big banks? Think of your bank's investing platform like buying groceries at a hotel. Yes, it works, but you're paying 4 times the price for the same product. Wealthsimple charges 0 commissions to buy or sell. The big banks often charge $5 to $10 per trade on top of their mutual fund fees. Now, download the Wealthsimple app. Sign up with your email, they'll verify your identity, have your SIN ready. It takes about 10 minutes. Once approved, you'll see options to open different account types. And this is where most people make their first mistake. They open the wrong account. So let's talk about that. Step 2, open the right account. Here's a simplified rule for most beginners. As I mentioned earlier, I have a dedicated video explaining which account is best for you based on your situation. But for now, here's the simple rule. Use an FHSA if you're planning to buy a home. Use a TFSA if you haven't maxed it out yet. And focus on an RRSP once your income starts getting higher. If this is clicking for you, if the Canadian investing system is starting to make sense, hit subscribe. I drop a new video every week breaking down exactly this kind of stuff for Canadians who are just starting out. Step 3. Buy one ETF and automate it. Once your account is funded, even if it's $50, search for XEQT or VEQT in the Wealthsimple search bar. I've got a full video comparing these two in detail. You can find the link in the description. The short version is, both are excellent, globally diversified, low-cost ETFs designed for long-term Canadian investors. Now here's the part that most people skip, and it's the most important thing I'm going to tell you today. Set up a recurring buy. In Wealthsimple, you can set up automatic deposits and automatic purchases. Link your bank account, set up a monthly transfer, whatever you can afford, $25, $100, $500. The amount matters less than the consistency. This strategy is called dollar cost averaging, or DCA. You invest the same amount consistently, every month, every paycheck, or every week, no matter what the market is doing. When prices are high, your money buys fewer shares. When prices drop, the same amount buys more shares. Over time, this can help lower your average purchase cost. But the biggest advantage is psychological. It removes emotion from investing. You stop trying to time the market, you stay consistent, and your investments keep growing in the background. Set it, automate it, and let time do the heavy lifting. And if you want a full breakdown comparing dollar cost averaging strategies, I've made a dedicated video on that too. Link in the description. Step 4, and this is genuinely the hardest step for most people, leave it alone. Let's be real. The market is going to drop. At some point this year or next year or the year after, you're going to open your Wealthsimple app and see that your portfolio is down 5, 10, 20%, and every instinct in your brain is going to scream at you to sell. Don't. Here's something that might help. The S&P 500 has recovered from every single crash in its history. Every one. The dot-com crash, the 2008 financial crisis, COVID, all of it. What separates the investors who built wealth from the ones who didn't isn't intelligence, it's patience. When the market drops, your fixed monthly investment is quietly buying more shares at a discount. You're not losing, you're stocking up. Think of it like your favorite store having a 20% off sale. That's a reason to buy more, not less. Time in the market always beats timing the market. Let's land the plane. 4 steps. Open a Wealthsimple account. Open the right account. FHSA, TFSA, or RRSP. Buy low-cost ETF or index fund. My recommendation, XEQT or VEQT, and set up a recurring monthly investment. And then leave it alone. That is it. That is the entire Canadian investing starter strategy, and it's what I genuinely wish someone had walked me through step by step. Drop a comment below. Where are you in this process? Just starting? Already set up? Let me know. And if this video helped you, do me a favor and hit that like button. It makes a massive difference. Subscribe for a new video every week on building wealth as a Canadian.